In this video, we'll be taking a look at a few chart analyses to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, learning to trade how to spot sweet and suitable price action for profit purpose, check out our complete Forex trading course on Udemy. I have the link attached in the description below. Last week we talked about gold and the expectation of us bouncing off this area of value, heading towards this resistance level of a symmetrical triangle, right? So this is symmetrical triangle, higher highs, lower highs, higher lows, right? So with a closed end. So this is a symmetrical triangle with a bullish breakout, it seems like. So I'm going to be reviewing this chart to see how we can take advantage of what we can see on the chart with relation to what we discussed last week. There's a gold chart on the 4 hours time frame. What you can see right now is price hovering around the resistance level of the symmetrical triangle. Take a measured price movement from our setup last week. This is approximately 500 pips. So 500 pips, decent one if you're able to get in. And right now, I am more bullish than bearish, so I'm going to be waiting for more consolidation over here, followed by another bullish breakout for me to go long. This is going to be my bullish case scenario for gold. So when we get this consolidation, we get a good breakout to the upside. My stop loss is going to be underneath the consolidation. First tick profit target is still going to be around these highs. Second one is going to be around these highs, while I trail the rest of my positions as we go higher. So remember, I like to follow patterns that gives me some sort of confirmation direction of the market, because there's a good chance we hit this trend line and we dump to the downside, right, before probably maybe going higher or going lower. So to avoid or to try as much as possible to mitigate the idea of falling into a fake out, which I know most traders do not want to fall prey to, we wait for those consolidations. Consolidations give us extra layer of confirmation before we dive into the trade. Even though this looks really bullish, the reason why I wouldn't be jumping into a buy trade right now is because if you go into a trade right now at these price levels, your logical stop loss is going to be around these lows, because this is the next immediate solid lows we had before we get price coming all the way down up to these price levels. Or your stop loss could be underneath these lows where we had this week, right? So if you have a good risk management strategy, you're willing to go in with a very small position, then by all means you can do this, right? But it's still very risky because there's no solid confirmation yet that we're going to head higher. Meanwhile, price is currently around the overbought level, so there's a good chance we maybe go up a little, so pump a little, then consolidate around these price levels before we see that final push to the upside, aiming for higher price target. So with this sort of confirmation, I can go in with heavy positions, right? Which is what I like to do, going with heavy positions, then with more confidence, setting my stop loss underneath the consolidation list of the breakout. Then I'll probably not set my take profit here, because then that's my entry is going to be too close to these price levels. I'm going to take out this and set this as my major first entry target. And if you measure this price movement, it's going to be approximately 800 pips to 900 pips, which is decent in my opinion for one trade on gold. Excuse me. So something else to take note of is that if you're patient enough to wait to see what the market does, there's a good chance we also pop off into this area of resistance, right? Slowly grind into this area of resistance before we get to that consolidation and a good breakout. So this is still going to be a decent opportunity to go long after the breakout. Stop loss is going to be underneath the consolidation that leads to the breakout, and your take profit target is going to be around price levels. And if you take a measured price movement, then that's going to be approximately 600 pips, which is also decent in my opinion. And if we take out this area of resistance, then we're in price discoveries. You hold your positions and hold it as long as you can, because there's no telling how high gold is going to go. So that's my bullish case scenario. I hope it's clear enough, straightforward. If you want to learn how to carry out simple, clean and clear price action trading setup like this, check out our Forex trading course. It's going to help you a lot. Tons of reviews already with positive feedbacks. Now I know it's good to talk about the bearish case scenario. Like I said, bearish case scenario could be popping off a little and dumping hard. That's the only bearish case scenario I can see right now, and that's not something you want to jump in on for a trade position, right? The only way you go short is if we come into this area of value, touch this support level of the symmetrical triangle, consolidate a little, and get a good bearish breakout, then I'm going to take out this area of value. So if this happens, then this will be your focus to go short. Stop loss is going to be above the consolidation, at least the breakout. Take profit target is going to be around these lows, and you trade your positions. As we go lower, you could also take some profit around these lows. So this is how I'm going to trade gold if I was to go short, but I don't think this is going to happen. But you never know. The markets these days can be crazy and unpredictable. So this is how I'm going to trade gold for a short position if that happens. Other than that, I'm going to be patient enough to get my solid confirmations for bullish case scenario, and I'm going to jump in as I've explained in this video. Moving on, we'll be talking about crude oil. So crude oil chart on a daily time frame, exactly what I explained last week is what happened. So we had a good consolidation over here, followed by a retest of this area of value. So I'm going to adjust trend line properly. So we had this trend line here with 1, 2, 3, 4. So 4 touches dating all the way back to 2023 September. Now we seem to have had another touch. Now the question is, are we going to consolidate a little before breaking out, aiming for this area of value, or is this just going to be a rejection where we fall lower to the downside and take out this area of support? So I'm going to go down to the lower time frame. So we're going to start with the 4 hours time frame to see what's happening over here, to get an informed, to be able to make an informed decision on how we're going to trade crude oil. So going down to the lower time frame, 4 hours, for example, if you zoom this in, so this is the trend line we're talking about. So solid trend line all the way from 2023 September all the way to current price levels. And yeah, last week we talked about how we could potentially see a pullback followed by a bounce to the upside. So unfortunately I didn't trade this. So for those who did, kudos to you. So this will be approximately 400 pips. Seems our setup last week made a banger. So right now, for me to go long, I'm going to be waiting for a consolidation over here, right? More consolidation. Remember, this is just some sort of confirmation and followed by a bullish breakout. So the reason I wait for consolidation again, another reason, or to give you more understanding of what this consolidation means, is even as much as we got this massive straight bullish move to the upside, the market is trying to decide, should we go up, should we go down? The bulls are trying to struggle with the bears to decide where the market is going to head next. That's the reason for consolidations, a struggle between the bulls and the bears trying to take over the market. So if after the consolidation we do get a bullish breakout, also taking out this trend line, it means the bulls won the battle, which means that's your confirmation to go long, right? Gives you better entry position, boosts your confidence with the trade, just in case you get reversals, you're not scared, and it helps you place proper stop loss in reasonable price levels, right? So if this happens, entry is going to be at a breakout, stop loss is going to be underneath the consolidation, at least at the breakout. First take profit target, obviously, you guessed it, is going to be around these highs. Second one is going to be around these highs, and third one is going to be into this area of resistance if we do get there. So this is a no-brainer, straightforward. This is how I'm going to trade crude oil for a bullish case scenario if this happens. A lot of traders like to trade bounces, which isn't a bad thing to do in my opinion, but if you are trying to mitigate risk, especially if you have a low trading balance, I wouldn't suggest trading bounces immediately price touches these price levels, right? Maybe price touches trend line, you go short immediately for quick pullback like scalping. But the risk to that is that there's no idea where you have to put your stop loss, because you could put your, I know you want to put your stop loss maybe 10 pips above, but that's just not how to trade. It's gambling in my opinion, right? Because you are just going to keep losing. There's a high probability that you're going to lose little chunks of your capital till you eventually blow up your account. So that's wait. It's good to be patient enough to play the long game, wait for proper setup, and go in when the market shows its hand. So for a bearish case scenario right now, I can't really spot any reason why I would want to go short on crude oil. The only reason I can see is taking this trend line like this. For example, you take this lows, right, and you wait. It's going to be a long wait. You wait to see what market does within its price levels. If it consolidates good enough to give us a bearish breakout, taking out this trend line, then this is going to be satisfactory enough, in my opinion, to go short. But then you have sequence of area of values to contend with. Then you have this area of value to contend with. Then you have this other one to contend with before you hit these lows. So it's going to be a risky move to the downside, except we see a catastrophic move in the crude oil market. Then you just get a short position and we hit straight down to this area of values, ignoring this area, these other obstacles along the way. That's the only way you make the most out of crude oil if you're looking forward to go short, right? Other than this, I'm just going to stick with my bullish case scenario right now, because that's more likely to happen than this happening, right? But even if this is going to happen, which is very, very possible, I'm still not just going to jump into a trade if we do something like this and down. So some traders would put a trend line here and go short here, which is decent in my opinion, right? Then stop loss is going to be above this area of resistance. So if you've got good enough balance, you've got good risk management, then by all means you can do this. So consolidation, drawing out a support level, and going short when the support level is broken, right? Your first take profit target is going to be obviously around this area of value, and the rest you hold your positions as we go lower. So this is another approach to trading a sell position in this market. But I'm going to show you something that happened if you try to do this over here. So if you try to do this over here, taking this lows as your area of support, for example, you can see a fake out here. But I know this is not a very good example to make because we just broke out from this area of value, right? But just to show you that if market is in a strong bullish move or showing some sign of strong bullish momentum, it's good to lean towards the bullish bias. If market is showing a strong bearish sentiment, it's good to lean towards the bearish bias, right? So that's how I'm going to trade crude oil. If you have questions, leave your thoughts in the comment section down below. If you have different opinion on how to trade crude oil, also leave your thoughts in the comment section down below. Moving on, we'll be talking about US100, which is the Nasdaq, right? So Nasdaq, solid bullish trend since January 2023, right? So for 2 years straight, we've been in a massive bullish trend, and it's kind of difficult to trade this setup if you don't understand how price action works. I'm going to go down to lower time frame because we are going to focus on what's happening over here, which is where we're going to focus on looking for trade opportunities for the week ahead. So starting with the 4 hours time frame, for example, if you zoom in, you would see that we've been making series of lower highs for the past few weeks, right? Or few days, yeah, few weeks. So since December 17th, 2024, so last year, we've had 1, 2, 3. So 3 lower highs, which equates to a descending triangle, right? If you take these highs, you take this area of value, so this looks like a descending triangle. Please don't mind the lines. The lines you can see on my screen right now are very important. That's why I'm leaving them. So this one is the long trend line from 2023. This one is the immediate one from current price action. So this is the confluence we currently find ourselves in that's going to determine if we're going to go short or go long. Now, for a bearish case scenario, yes, this is a bullish trend. And I know what I said a few minutes ago about leaning towards the bullish bias if the market tends to be bullish, right? So just because the trend is bullish doesn't mean we can't go down. And the current market structure signifies that there's a good chance we go down. All we have to do now is wait for confirmation to tell if the market is lying or not. How do we do that? We do that by waiting for better consolidation around this area of value, followed by a good breakout. If this happens, then that's a no-brainer. We're going lower. You go in after the breakout. Stop loss is placed above the consolidation list of the breakout. And your first take profit target, oh, there are so many price levels to watch out for. So 1, second take profit target, 2, third take profit target, 3, fourth one, 4. You just pay attention to the market till we eventually or probably hit this long-term trend line. And if this happens, this is going to be a whooping 12,000% or 12,000 pips price movement, or 14,000 pips, 1,400 pips movement. That's 1,400 pips movement, right? But there's a good chance we don't get here. There's a good chance we reverse from one of these area of values. That's why you pay attention to your positions as we go lower. take some sizes or some positions out of the market as you make profits. So don't just hold everything expecting that we'll get here, because there's no guarantee that we'll hit this trend line. This is how I'm going to trade Nasdaq for a bearish case scenario. Now, if we do not get that bearish breakout, it means there's a good chance we are going to see some sort of reversal, which in turn leads to a bullish momentum, right? And what's that bullish momentum we're watching out for? So watching out for a good bounce off of this area of value into this trend line, right, where we have the lower highs, consolidation a little, and a bullish breakout similar to what we can see on gold. So going back to the gold chart, you can see trend line, lower highs. You can see bullish move to the upside. Now waiting for a consolidation to give us a bullish breakout to the upside. Similar situation on Nasdaq. Wait for consolidation over here, because this is a trend line, and a bullish move to the upside. If this happens, entry is going to be after the breakout. Stop loss is going to be underneath the consolidation leads to the breakout. Consolidations are confirmations. Remember that take profit target can be first one here, just because this one is too close to your entry. But when it gets here, you can set your stop loss to price entry, break even, so you can safeguard your trade, right? So second take profit over here, and you trail the rest of our positions as we go higher, because price is eventually going to be in price discovery. So at the moment, it's difficult to tell what's going to happen exactly in this kind of market. That's why we are open to both trade opportunities. So whichever presents us with the best opportunity at the right time, that's what we are going to take advantage of. But right now, it seems to be leaning towards a bearish case scenario than a bullish case scenario. But be patient enough to wait to see what the market does. Let the market show its hand. Don't just jump into a sell position right now, because there's a good chance we'll reverse really quickly and the price starts going up. But for a bearish case scenario, you wait for that consolidation and a bearish breakout to the downside, which is going to be a no-brainer. Entry here, stop loss here, and you trade the sub positions as we go lower. That's it briefly for Nasdaq. This I'm going to trade a bullish, bearish case scenario for those who's going to be trading this. Moving on, we'll be talking about Nasdaq. So Nasdaq, USD-CAD, excuse me. We just talked about Nasdaq. So USD-CAD, I talked about this last week, and we've been talking about this for months. Massive range, dating all the way back to 2015. Good area of consolidation. Remember what I said about consolidation. See, we had a move to the upside, and we have this huge consolidation for almost 4 years or 3 years, as the case may be. Markets deciding where to head next, what's going to happen, who is going to win the market over. Eventually, you can see after this breakout, the bulls won after 2 years. That doesn't mean you couldn't have taken good trade opportunities within this range. But eventually, the bulls won, and now we seem to be heading towards the all-time highs. Now we're going to be focusing on what's happening over here to spot good trade opportunities for the week ahead. So going on to the lower time frame, I'm going to go down to the 4 hours time frame, for example, which is what we discussed last week. So last week I told you the way to trade this is waiting for a breakout of the resistance level. So I'm going to go down to the 2 hours time frame, so this is clearly visible. So 2 hours time frame, I told you in order for you to take advantage of this price action, you are going to wait for a bullish breakout from this area of resistance. But unfortunately, market dumped. But now it seems we are getting back into this area of value, and analysis still stands, right? Hitting the area of value, consolidating a little, and giving you the bullish breakout. Entry is going to be after the breakout. Stop loss is going to be on any consolidation leads to the breakout. Take profit target is going to be all-time highs, and it's going to be approximately 200 pips, decent 200 pips price target in my opinion. Combine this with what you make on gold and crude oil. If those goes as planned, then you are all set up for massive profits this week. So another reason now, just to show you why it's good to lean towards the bullish case scenario when the market is bullish, is this, right? So this is what I was trying to explain on crude oil, right? So now we have this area of value. So assuming this hasn't happened, we have this area of value. Just because we bounced off of these highs, we took out this area of value, which is a support level. Then now you tend to jump into a sell position over here, thinking, oh, the market is exhausted and we're going to go lower. You can see market shamed you really hard, because you can see the reversal to the upside now, back into this area of value. So that's the reason why it is good to lean towards the bullish case scenario when market is extremely bullish than trying to counter trade the trend, right? So right now, the reason why this is better to explain than what we had on US 100, which is Nasdaq, is because the current market structure from last month till now has been bullish. Meanwhile, just going back to the Nasdaq real quick, current market structure from last month has been ranging on Nasdaq, right? That's why you can't compare the structure we have here to saying you want to go long over here to what we have on US30. So that's the reason why we have these different area of values to help you manage your position, because we could hit any of this area of value and continue the bullish trend, similar to what we have on USD-CAD. You can see we came down here. There's no significant area of value around these price levels, but market just reversed. This is one of the reasons why I don't like to trade currency pairs, because they can act really funny and crazy sometimes. So this is how I'm going to trade USD-CAD. No bearish case scenario for me. All bullish, area of value, breakouts, entry, stop loss, and take profit targets. Moving on, lastly, we're talking about US30. So US30 is similar to what we have on Nasdaq. We have a good trend here dating way back to October 2022, but we have just 1, 2, and 3 touches, right? There's a very good chance we come all the way down to touching this trend line before we go up. Very unlikely, but very, very possible, right? So I give it a 50-50% chance that we are likely going to come all the way down to this trend line before going higher again. Now, how do we trade the setup? Going down to the lower time frame, 4 hours, for example. So 4 hours, we're going to focus on, we're going to focus on, so we're going to focus on this area of value. I think you already know what I'm going to say, right? I'm going to get rid of this because right now those looks invalidated. I'm going to redraw those. So I guess you already know what I'm going to talk about. To go short, you guessed it, I'm going to wait for more consolidation or small consolidation followed by good bearish breakout. This then looks like a head and shoulder. The head here, right shoulder, left shoulder. A breakout from the neckline means there's a good chance we go all the way down to these lows. First, take profit targets. Second, take profit target around these lows. And we're just a few pips away from hitting this trend line, right? So when this happens, entry is going to be after the breakout if we do get the consolidation. Stop loss is going to be above the consolidation, at least to the breakout. And you already know the rest. This is my bearish case scenario for US30. So just because this has been a bullish trend since 2023, doesn't mean we can't go down, because the current market structure indicates that there's a good chance we go down, and we all know head and shoulder pattern is a sign of a trend reversal pattern, or a sign of a trend reversal, head and shoulder is a pattern, right? So this is my bearish case scenario for US30. It's a no-brainer. If this happens, I'm going to jump in, damn the risk, use a good risk management, of course, but I'll be more confident getting into this trade than trying to trade a bounce around these price levels, because a breakout from this price level signifies that the bears have probably overpowered the bulls as a result of the structure we've seen over the last few weeks, right? So assuming price will stay at these price levels, then it would have been logical to expect some sort of bullish move to the upside, right? So now there's a good chance we bounce off of this area of value and head higher. Now, for us to trade that, we wouldn't just be trading the bounce. So what we'll do in that case is take this trend line, take these highs, right? Extend it all the way down to the area of value and watch, see what the market does for your confirmation. Remember, it's all about confirmation, so you can get enough confidence to jump into this trade. Some traders would like to go in here. They want to do what they call it sniper entry. They jump in at the touch of this area of value. They put their stop loss under here, which is not a bad thing to do in my opinion, but there again, there's no confirmation, there's no way to tell or to increase your confidence that this is going to bounce up. Meanwhile, I do it sometimes, right? I do it sometimes. All traders do it sometimes, trading bounces. It's even some trader strategy, right? It works sometimes. But what I'm trying to say is the better way would be waiting for that bounce, right? Consolidation within this range, and then a bullish breakout to the upside. This would be a better confirmation. Entry is going to be after the breakout. Stop loss is going to be underneath these price levels or this area of value. And first take profit target can be this highs. Second one can be this highs. This would be a better way to trade this setup for a bullish case scenario rather than just jumping into a bounce because you want to get tighter stop loss. Meanwhile, there's a good chance this just breaks lower. So this gives you better sort of confirmation, confidence towards your trade when you go into trades like this, right? So I'm not saying trading bounces are wrong. I haven't taught in my course how to trade bounces, but what I'm saying right now is waiting for confirmations like this, which is also taught in the course. Waiting for confirmations like this gives you a better, opportunity for a good trade positions entering the market with extreme confidence, right? It doesn't mean you still can't lose trade with this, right? But it just means you have done your due diligence before entering the market. So this is my bullish and bearish case scenario for US30, and that's going to wrap up this video for this week. Please, if you have questions, if you have thoughts, if you have opinions, leave them in the comment section down below. Once again, if you're interested in learning Forex professional, check out our complete Forex training course on Udemy. I hope you found this video helpful. That's it from me, guys. See you next week.